I'm Alix Steele. Welcome to Bloomberg Commodities Edge, where we focus on the companies, the physical assets, and the trading behind the hottest commodities with the smartest voices in the business. Let's get right to Data Dig, where we look at the top market stories of the week. First up, inventories. Super bullish. Prices jumped as much as 4%. Overall stockpiles actually fell by almost 6 million barrels. Now, we saw a huge decline in the Gulf Coast as well as over in the East Coast, where stockpiles right now are at their lowest level in about 30 years. So staying on something that's rallying, lumber prices totally on fire, up more than 60% so far this year. And the theory is that prices could go even higher, especially through the summer peak of the U.S. home building season. And finally, everyone talked about Bitcoin, crypto, Coinbase this week. And so for some commodity world people, it's about how to power Bitcoin, where the machines actually use a lot of energy. Now, Citi had a great report out that showed the power load for Bitcoin's now surged about 66 times since late 2015. That's more than all of Argentina. Now, with 60% higher intensity for carbon, because a lot of the mining activity actually is in China, which is primarily powered by coal. So they provided this great pie chart that shows the electricity breakdown consumed by Bitcoin to see if it actually is dirtier. And 54% so far is related to coal, only about 14% to natural gas. All right, now let's get into the ring. When BP announced its energy transition strategy last year, not only did it pledge to become a net zero company by 2050, but it also promised to help the world get to net zero. Now, Bloomberg Green has found that BP's green ambitions may have been counterproductive. Now, Bloomberg's oil and gas reporter Rachel Adams-Hurd has the story. Rachel, it's a great piece of reporting. What'd you learn?
Well, I learned a lot. Honestly, I just hadn't looked at a sustainability report that in-depth in my career since we had all these net zero targets. So it was really interesting to see kind of the breakdown on the company level where these greenhouse gas emissions are coming. And then when we got the 2020 report just a few weeks ago to see the impacts that these divestments are having, which is really huge, especially when compared to things like operational improvements and the impact from COVID.
So what were some of your takeaways? What did the selling of some of the Alaskan assets actually do for BP?
Well, it allows them to hit its debt targets, which was probably the primary driver. And then it also allows them to reduce their operational Scope 1 and Scope 2 emissions, which are crucial for net zero. And they say that this is so that they can invest in things like solar and wind, and that even if you don't see an absolute reduction in emissions, that it's ultimately going to benefit the world because they're going to be able to lower emissions in the long term by investing in renewables. In Alaska, there was a lot of controversy surrounding Hilcorp as the buyer because there had been a series of missteps that Hilcorp had a few years ago. They had this 4-month pipeline leak, which actually just leaked again last week. And so there was also concern about having a private company become the buyer of these assets. Alaska isn't like Texas. You don't have hundreds of independent oil and gas producers drilling for oil. It's really been run by the majors. And when you have a company that's been as big of a deal to the state economy as BP, when the new player is a private operator that doesn't have as long of a track record, has more environmental mistakes that have come with its operations than BP, there was a lot of concern about that.
What was BP's response?
BP says that divestments are still hugely important to its strategy. They say that they're going to continue selling assets, which Rystad expects across the board, across all majors, regardless if they have a net zero target in place or not. And they say that regardless of the near-term emissions impact from having a new operator simply taking over those assets, that they see this as crucial to being able to invest in those other projects that would hopefully help to lower absolute emissions.
Rachel, thanks very much. Really appreciate it. Bloomberg's Rachel Adams-Hurd. Time now for Commodity in Chief, where we talk to one executive in the commodity world. And today it's Tom Siebel, Chairman and CEO of C3 AI. So first, a look at the company. It's the future of artificial intelligence. It's vast. From predictive technology to healthcare to cybersecurity to climate change, the potential really is everywhere. Enter C3 AI, led by Siebel, the software giant and legendary techie. Here's how it works. C3 AI provides the platform, and their customer then uses it within their expertise. Now, one way is by selling subscription services for analytic functions for energy management, like inventory optimization or customer relationship management and predictive maintenance. Now, A popular example of this is if, say, a piece of equipment needed a replacement part, like on a plane, for instance. AI can tell you about that 2 days before the part fails, saving you time, money, and a headache. The company also partners with Microsoft, Baker Hughes, AstraZeneca, Shell, and leading universities, forming C3 AI Digital Transformation Institute, all of that to speed up the use of AI in the world. Now, at the end of 2020, it had 30 clients, with 3 of them making up 44% of its revenue, and the lion's share really coming from Baker Hughes at 70%, a huge believer plus a minority owner. And C3 AI gets about 30% of its revenue from the oil and gas industry, and it's betting it can get a whole lot more, especially as oil power producers and powerhouses transition to a renewable and cleaner future. I recently caught up with Tom Siebel and asked him how AI helps the oil and gas industry.
We can use AI to identify device failure on an offshore oil rig before it happens. And these offshore oil rigs are very, very complex machines. And, when things go bad, they can go very bad, very fast. And, as we all know, and the cost of failure is basically incalculable. And so we can identify failure of these devices on the offshore oil rigs, say 18 to 24 hours before they happen, say low pressure compressors or whatever they might be, that might sound innocuous, but when they fail, it's catastrophic.
How much do you wind up saving a company, for example, with the predictive technology, rather than, say, like waiting for a part on the rig to fail and then having to replace it?
Well, when you do it across their entire value chain, upstream, downstream, midstream renewables, you're looking at potentially $3 or $4 billion a year in economic benefit.
Wow.
And by the way, this move to renewables on the part of Shell and Enel and others is really not about, I think it's less about embracing climate change, which or climate security, which they all do, and environmental security, they all do. Candidly, as renewable energy companies, they're going to make more money. Okay, they're going to be more profitable entities.
Is there stuff that the AI will be used in the oil and gas industry or alternative energy industry that you think is going to be really different and cool that we're not even thinking about a year ago?
Well, it sounds a little mundane, but if you apply AI-based predictive maintenance to hundreds of millions of assets, okay, in the power production and distribution network, I mean, you avoid Texas. Okay, when these things break, it goes real bad. Okay, when you can, for example, identify a transformer failure in New York before the transformer fails. Lights don't go out in New York for 3 days. I mean, this is a good thing. People don't die. And so, we look at, across the oil and gas value chain, this is everything from well placement analytics, the optimization of hydrocarbon production, integration of renewables, AI-based predictive maintenance, distributed energy resource management, fuel station analytics. I mean, Shell sells more coffee than Starbucks does. Okay, they have 5,000 retail outlets. They literally sell more coffee than Starbucks. So we're completely transforming the oil and gas value chain from exploration to production to distribution, and most importantly, integration of renewables. And there's a very, very critical AI problem called distributed energy resource management, which has to do with the balancing of these energy sources.
And just on that point, does that mean like if you're a utility company in your power mix, so it's making sure you have the right power mix?
The load on the grid has to balance at any given second the amount that's being produced. Okay, that has to stay in balance. You just can't take excess power and power it into the ground. Okay, and you have too little power, you have brownouts, and things start to fail. So it has to balance perfectly. Now, this is relatively simple when you had one producer, say a generation facility, and many consumers. Okay, now with the smart grid, we have everybody is a producer of energy. With their batteries, with storage, with their solar panels, with their windmills, sometimes at very, very large scale in the North Atlantic. So this business of distributed energy resource management, where we're balancing load and demand in real time across a grid infrastructure that might be like Western Europe, is a extraordinarily difficult problem, and it is an AI problem. And without this technology, we cannot deploy renewables.
All right, time now for our commodity kicker. So first, it was toilet paper. Hand sanitizer. Now consumers are red-faced over the latest COVID-19 pandemic shortage. Ketchup, or ketchup packets to actually be specific. The packets became a hot commodity after restaurants amped up their takeout game. Now Heinz promises to catch up, aiming to increase production by 25%, delivering at least 12 billion packets as they squeeze out more production. In the meantime, the shortage has sparked an underground trade in the coveted ketchup packets. Diners with the good fortune to have a stash are listing them on eBay to make a seriously quick buck. That does it for Bloomberg Commodities Edge. Make sure to catch us every Thursday at 1 p.m. New York time, 6 p.m. in London. This is Bloomberg.